What's up everybody? It's SKK_Finn and welcome to the channel. Today, we're diving deep into the world of financial products. Whether you're just starting out on your financial journey or you're already a seasoned investor, understanding the ins and outs of different financial products is absolutely crucial for building wealth and achieving your financial goals. We'll be covering everything from the basics of savings and investments to more complex topics like retirement planning and alternative investments. Think of this video as your one-stop shop for all things personal finance. Now I know what you're thinking. Financial products? That sounds boring, but trust me, this is important stuff. By the end of this video you'll have a solid understanding of how these products work and how you can use them to your advantage. So buckle up, grab a notebook, and let's get started. Let's kick things off with the foundation of any solid financial plan: savings and deposits. Now I know this might seem basic, but you'd be surprised how many people overlook the importance of a good savings strategy. A savings account is like the bedrock of your finances. It's a safe and secure place to store your money, and it earns you a little bit of interest along the way. Think of it as your emergency fund, your rainy day fund, or your "oh shoot, I need a new transmission" fund. Next up, we've got fixed deposits, also known as CDs. These are similar to savings accounts, but they typically offer a higher interest rate in exchange for agreeing to keep your money locked in for a set period of time. This can be a great option if you have some money that you don't need to access immediately and you want to earn a little extra interest. Now I know what you're thinking. Graham, these interest rates are tiny. I'm not going to get rich off of a 0.05% return, and you're right. But that's not really the point of savings and deposits. The real goal here is to establish a solid financial foundation, build up your emergency fund, and have a safe place to store your money while you figure out the rest of your financial plan. Remember, Rome wasn't built in a day, and neither is a solid financial future. Start with the basics, build a strong foundation, and you'll be well on your way to achieving your financial goals. Alright, let's move on to the exciting stuff: investments. This is where your money really starts to work for you. Now, I'm not talking about getting rich quick schemes or gambling on meme stocks. I'm talking about building a diversified investment portfolio that will help you grow your wealth over the long term. First up, we've got stocks. When you buy a stock, you're essentially buying a small piece of ownership in a company. If the company does well, the value of your stock goes up and you make money. Of course, there's always the risk that the company could do poorly and your investment could lose value. That's why it's so important to do your research and invest in companies that you believe in. Next, we've got bonds. Bonds are essentially loans that you make to governments or corporations. In exchange for lending them your money, they agree to pay you back with interest over a set period of time. Bonds are generally considered to be less risky than stocks, but they also typically offer lower returns. Now let's talk about mutual funds. A mutual fund is a basket of stocks, bonds, or other assets that is managed by a professional fund manager. This is a great option for investors who want to diversify their portfolio without having to pick and choose individual stocks or bonds. Investing can seem daunting, but it doesn't have to be. Start by educating yourself, figuring out your risk tolerance, and investing in things you understand. Remember, the key to successful investing is to start early, stay consistent, and think long-term. Now let's talk about something that nobody likes to think about, but everyone needs: insurance. I know, it's not the most exciting topic, but trust me, having the right insurance coverage can save you a ton of money and heartache down the road. Let's start with the big one: life insurance. Life insurance is designed to provide financial protection for your loved ones in the event of your death. If you have a family that depends on your income, life insurance is an absolute must. It can help cover expenses like funeral costs, mortgage payments, and even your children's education. Next up, we've got health insurance. As you know, medical expenses can be incredibly expensive. Health insurance helps to cover the costs of doctor's visits, hospital stays, prescription drugs, and other medical expenses. Even if you're young and healthy, you never know when an unexpected illness or accident might occur. There are other types of insurance like auto insurance, homeowners insurance, and renter's insurance. These policies are designed to protect you financially from specific risks, such as car accidents, theft, or natural disasters. The key to insurance is to find the right coverage for your individual needs and budget. Don't wait until it's too late. Get covered today and enjoy the peace of mind that comes with knowing you're protected. Retirement might seem like a lifetime away, but trust me, it sneaks up on you faster than you think. That's why it's so important to start planning for retirement early and to take advantage of the various retirement products available to you. One of the most common retirement products is a 401k. This is a retirement savings plan that is sponsored by your employer. With a 401k, you contribute a portion of your pre-tax income to the plan, and your employer may even match a portion of your contributions. The money in your 401k grows tax-deferred, meaning you don't pay taxes on it until you withdraw it in retirement. Another popular option is a Roth IRA. A Roth IRA is a retirement savings account that allows you to contribute after-tax dollars and withdraw your earnings tax-free in retirement. This can be a great option for younger investors who anticipate being in a higher tax bracket in retirement. In addition to 401ks and Roth IRAs, there are other retirement products available such as traditional IRAs, SEP IRAs, and simple IRAs. Each of these plans has its own set of rules and regulations, so it's important to do your research and choose the plan that's right for you. Remember, the earlier you start saving for retirement, the better. Take advantage of employer-sponsored plans, maximize your contributions, and watch your retirement nest egg grow. Credit can be a powerful tool when used responsibly, but it can also be a slippery slope if you're not careful. Let's break down some common credit products and how they can impact your financial health. First up, we've got credit cards. Credit cards can be a convenient way to make purchases and earn rewards, points, or cash back. However, it's important to remember that credit cards are not free money. If you don't pay off your balance in full each month, you'll be charged interest, which can add up quickly. Next, we've got personal loans. Personal loans are installment loans that can be used for a variety of purposes, such as consolidating debt, financing a large purchase, or covering unexpected expenses. Personal loans typically have fixed interest rates and repayment terms, which can make them easier to budget for than credit cards. Finally, let's talk about mortgages. A mortgage is a loan that is used to purchase a home. Mortgages typically have long repayment terms, such as 15 or 30 years. While owning a home can be a great investment, it's important to make sure that you can comfortably afford the monthly mortgage payments before taking the plunge. The key to using credit responsibly is to live within your means, make your payments on time, and avoid taking on more debt than you can handle. Remember, credit can be a valuable tool, but it's important to use it wisely. The world of finance is constantly evolving, and new financial products are emerging all the time. Let's take a look at some alternative financial products that have been gaining popularity in recent years. First up, we've got cryptocurrencies. Cryptocurrencies are digital or virtual currencies that use cryptography for security. Bitcoin is the most well-known cryptocurrency, but there are thousands of others in existence. Cryptocurrencies can be a volatile investment, but they also have the potential for high returns. Next, we've got peer-to-peer or P2P lending. P2P lending platforms connect borrowers directly with lenders, cutting out the traditional financial institutions. This can result in lower interest rates for borrowers and higher returns for lenders. Finally, let's talk about crowdfunding. Crowdfunding platforms allow individuals to raise money for a variety of purposes, such as starting a business, funding a creative project, or covering medical expenses. Crowdfunding can be a great way to access capital that might not be available through traditional means. Alternative financial products can be risky, and it's important to do your research before investing. However, they can also offer opportunities for diversification and potentially higher returns. That's it for today's video. We've covered a lot of ground, from the basics of savings and investments to the complexities of retirement planning and alternative financial products. Remember, knowledge is power when it comes to your finances. The more you know about different financial products, the better equipped you'll be to make informed decisions that will help you achieve your financial goals. If you found this video helpful, be sure to give it a thumbs up and subscribe to the channel for more personal finance tips and tricks. And don't forget to hit that notification bell so you don't miss any future uploads. Until next time, stay informed, stay invested, and keep crushing it.